Okay, so I started recording already. So one more time, welcome guys. Thanks for joining in this session again. Okay, so let's just get to the main point. Let's get to the main business here. I'm going to share my screen now. Right. Okay, so let me know if you guys can see my whiteboard. Let me know if you can see my whiteboard, if you can see my circle. Okay, all right, okay. Okay, so I need you guys to reply on the chat. I have my chat here so I can see what everyone is typing. So you should reply on the chat if I ask any question or anything. All right, so let's get started. The topic for this session is the retail trader's mindset. The retail trader's mindset. Now, it happens that in Forex, when everyone gets into Forex, we get accustomed to some set of cultures. We get accustomed to some set of rules that we met. Those rules work. Everything we meet in Forex, they actually work. They actually do work. But if you understand what a culture is actually, a culture is something that we get to do like over time. We do when we do stuff over time, either negative or positive, it becomes a culture. So we have cultures in Forex. We have cultures in Forex. Those are stuff that we've met on ground, stuff that we got into when we got into Forex, that we got introduced to. So those are the things that we'll be questioning, just as we've started in the last questioning the culture of Forex session. So we'll actually be questioning the culture of Forex. So I think last 2 weeks we talked about. I tried to paint a picture in you guys' perspective about how Forex should actually be seen. Forex should be seen in the perspective of the big boy. I explained how the big boy, why we call it the big boy at Trex. It's a combination of both the hedge funds, the big banks, and everything. So we just decided to call it the big boy. Then Forex should be seen in the light of the big boy controlling everything in the market, which is actually true because the big boy controls everything in the market. I keep saying this, and it probably sounds, absurd to some people. That trust me, the big boy cares less about whatever you as a retail trader does in the forex market. He cares less about it. He's going to do just what he would do. He will do just what he would do. His main plan in the forex market is to buy and sell. Our main plan also is to buy and sell, but we need to understand his because he's like the mastermind behind everything. We need to understand the way he works, the way he moves and everything. Okay, so I painted the picture where the big boy having the foresight about what will happen in the future. He was in 20 what now? I think 2015. I've forgotten what the story I told. It was in a particular year. Then he already knew that something would happen in the next probably 5 years or something. Then he already started gathering, building houses and everything, building infrastructures, in the hope that when that time comes, when that time comes, rather, people would, come and invest. People would come and buy what he already invested in. And that is just how it is in the forex market. That is just how it is in the forex market. The big boy actually enters a position, goes in long, goes in very hard, then he tries to keep his profit. He tries to take his profit out, then he either goes longer or he changes direction. That is just how the forex market is. But there are plenty things that we need to understand to be good traders. There are plenty things that we need to understand. All right, so today we're talking about the retail traders mindset. Now, we retail traders, we are the ones who get into forex, and we meet lots of cultures, we meet lots of rules, drawing lines, trend lines. We know what the trend is. All these theories that we need to get accustomed to in forex. We meet them, but are those theories actually what forex is about? Like, are those theories? Do those theories make you money? do those theories make you money, or they make you lose money? Now the thing is, I've gotten to understand something over time, that when you focus on a particular thing, when you place your what now your zeal and your focus on a particular thing, you get better over time on that thing. So the good thing, or the best position to be in, is to get a very sure culture. Now, I'd like you to know that I am not going against culture. I'm not going against culture or anything. Yes, we need culture to live. We need culture to move. You understand? We need to get accustomed to a particular way of doing things. But the main thing is getting accustomed to the best way to do something, and that is what I want to show you guys, the best way to see forex, the best culture to adopt in forex. Let us question the culture that we met. All right, so let's get to the main stuff here. So the retail trader's mindset. Now, we know about support and resistance. We know about highs and lows in the market. Now, I would have said that we allow this class be interactive, but it can't be because lots of people will be watching this class. So I'll just get to the main point. Get to the main point. Then I'll probably drop my number, my WhatsApp number. Let me drop it now. My WhatsApp number is on the chat. So if you have any question, 696. Yes. Yeah, seems yeah, join the more online. The session is being recorded, so everyone would get to see it after now. Okay, so that's my WhatsApp number online, and if you have any question after this session, just chat me up privately, and we'll see how things will go. So normally, according to retail traders' mindset, according to the way we think, according to the culture we've met, we know that there will surely be a resistance line in the market, and there will surely be a support line in the market. In the sense that where the market respects, where the market retraces at, where the market reacts to. So we tend to draw lines and everything over there. So when we are in probably in an uptrend, or let's say in a range right now, we know that when a line bounces, when the prices bounces from around here and drops down and bounces from here also and goes back up, we know that these levels are key levels in the chart. You know, these levels are key levels in the chart. Then we tend to psychologically we tend to draw lines. Even if we don't draw them like literally on the chart, we tend to draw those lines in our minds and everything. But the thing is, does the big boy actually care about those lines? Does he actually care about them? Does he actually care about what we perceive in our mind when we look at the chart? Now that's the way that those are the things we should think about. That's how you know if you're ready to make money. It's not just about the rules and everything. It's not just about the rules. Now it happens that a normal there are things to watch out for. There are things to watch out for. I have realized that a normal retail trader gets number one, what we call FOMO in the forex market, fear of missing out. FOMO means fear of missing out. So a normal retail trader gets trapped into FOMO. So when an activity happens, they want to jump in. They don't want to miss out of the activity. They don't want to miss out of the activity. And a normal retail trader also gets trapped into a sudden move. Now this is different from FOMO. Sudden move. Now the sudden move is what causes the FOMO actually. The sudden move is what causes the FOMO. But there's a part where you see something. When you see a move in the market, then you get scared. You get, like you should be in this trade, you should be in this, you should be here. That is what we all think. That is what retail traders think, because we feel like when there is a move, that is when to make money. When there is a move, that is when to make money. Yes, I actually did teach about this too in my initial classes, that when you don't make money outside the boring state, which is very true. There's no money in the boring state in the market. There's only money in the moving state in the market. only money there. But there are things to watch, even in the moving state. There are things to watch. There are really things to watch out for. That is why you see a situation in the market where, excuse me, you see a situation in the market where after after a sudden move, after a sudden move up, and everybody gets, scared and everybody gets active. Okay, now let me not use the word scared. You see, moves get people active in the market. Sudden moves. It doesn't even have to be sudden, but moves. When you see an obvious move in the market, this probably out of a range, a range breakout, or a moving trend rather. It gets people active, gets people to work. So when you see moves like this, they get people active. Moves like this get people moves like this get people active, and they want to join in. They just want to jump in and all. So when you see something like this, that's why you see that in situations like this, after a very strong move up, then you see something like this coming back down and stopping people out wherever your stop loss might have been. Because we also still have a culture, we also still have a way of placing our stop losses, you know, a way of trying to minimize our risks. We also have ways of managing that, which is the culture that we met. So that is why you see that's why you see those kind of situations after a very strong move and people get active, jumping into the direction, jumping into the obvious direction, then you see a reversal, a total reversal in the market. So those are traps. Those are retail traps, retail trader traps. Those are the things that you need to watch out for. Now I know that if you're seeing this video, you probably might be thinking that, okay, so when should we get into a trade? When should we? Are you saying that? You might be thinking that. Am I saying that we should not move, we should not trade at all, we should not do anything when we see a move? That's not what I'm saying. What I'm saying is that there are things that the big boy does that we need to take account of, and we need to look into before we place any trade. Before we, how sure are you in the scale of 100%? Are you sure? Are you 80% sure that that trade is going to work out for you? Most people might say that it's not possible. Most people might say it's not possible for a human, or retail traders like us to be 80% sure. But trust me, it is very possible. There are things to look out for. There are things to look out for. If you can get yourself off the culture that you met, if you can get yourself off get if you can unwind, if you can unwind off the culture that you met, then there are things that you can actually be more than 80% sure when you get into a position. I got into a trade on Friday on gold, and I posted it on my status, on my WhatsApp status. Immediately when I got into the trade, I said something like, this trade is something that most traders would not want to get into. Now, when I mean most traders, I mean advanced, even advanced traders. They won't want to get into the trade because it's like I am counter trending, or is it counter trending, or it's like I'm doing something that I should not do actually. But I really did get into the trade, and I used a good lot size. It wasn't because I just wanted to test my luck. When you're still in the state of testing your luck in forex, when you depend all on your technical analysis, the lines you draw and everything, trust me, you're in the state of testing your luck, and that is very risky for your money. That is very risky, very very risky. So you can actually be in a position where you are even more than 80% sure of your position, of the action you take in the forex market, and that takes patience. That takes knowledge. That takes knowledge. People complain a lot that forex is very risky. You lose your money and everything. It's just your level of knowledge actually. It's just your level of knowledge. Yes, people lose money in forex, but when you know you actually want, what you're doing, you make money. You surely make money. So let's get the talk out. There are two things to watch out for as retail traders. Number one, the fear of missing out and sudden moves in the market. Now, what's the fear of missing out? I already gave an example that when after a range, because nobody really wants to be in the boring state of the market. Nobody cares about the boring state of the market. It's just ranging. Nothing is happening. Nothing is really happening. Let me see if I can get an example of gold. An example of a ranging market, which I believe nobody would want to be in. This is 1 hour. This is 1 hour chart. Let's see if we can get a boring state. Okay. Now let's take this part for instance. Let's take this part for instance. Now let's just assume that this whole part was never here. Then we wake up very early in the morning to see a chart, to see our market ranging like this, to see the price action going like this. Nobody would be interested in placing any trade. We would all be ready to trade, but we'll just skip this chart because nothing is really happening. No one is interested in the boring part. No one is interested. But watch something around here. Watch what happened just after the boring part. Now let's assume that this also was not there. This part also was not here. Now watch what happened. Let me try and increase this. Sorry. Sorry. So, okay, good. Now let's watch what happened around here. We woke up early in the morning, and let's say this was the previous day's price action. Not like it went up very much. Then the next day we got this boring state. We got this boring state in the market. Nothing was happening. Now this is like how many hours? Because this is 1 hour. Then this is like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This is almost 12 hours. 12 hours of no action on gold. Now you could imagine how much bored people would be in this state because nothing is really happening. Nothing is really happening. So nobody would want to do anything around here. But just look at this. Look at the sudden move around here. Look at the sudden move that happened. It went up so strong. Now, trust me when I say that retail traders would not have caught the move from here. Retail traders would not have caught the move from here. Now, let's clear that. So let's say the first move came up this strong, just this little one. Then we saw a red candle again come back down. The normal thing that a retail trader would be thinking is that, okay, maybe the move is just a fake move. Maybe it's just nothing is happening yet in the market. Then we saw another very strong move upwards. Trust me, no retail trader would still be in the trade around here yet. No retail trader, because we don't know what is happening. We don't know what is happening in the market. This is just a move after a boring state. And one of the cultures, one of the rules that we've learned, that we got to, we met in Forex, is that when there is a breakout in the market, then join it. When there's a breakout of a range, then yes, an activity has started. Come on, get in, join in, don't miss out. Don't miss out. So now look at this sudden breakout. This is just where after seeing this sudden move, this is what we call FOMO. I mean, this is the FOMO region. The sudden move is the FOMO region where people will be like, okay, I don't want to miss out on this. This is obviously a buy. And let us assume that all of this here, this red candle and everything, all of this here had never happened. Would you believe that, or would you think that price would come back down? No. No retail trader would think that price would come back down again. All everyone will be thinking is that, yes, this is a buy. This is obviously a buy. Look at how strong the candle is. Look at how strong it is. This is obviously a buy. Then we'll probably set our support. We'll probably set our support around here. Where's my line now? Okay, let's use this. We'll probably set our support around here, because that is where price bounced from before it went up. We'll set our support around here. But look at what happened. Who would expect that this kind of thing would happen? Who would expect that there would be a manipulation? Who would expect that everything would, crumble down? Who would expect it? Is the we are so much accustomed to lot of cultures in forex. We are so much accustomed to a lot of rules and everything. But if we can let down everything we've seemed to know and everything, and you try to listen to me, you would understand that forex is much more than we actually think it is. Forex is very fun, very sweet, only when you know what is really happening in the market. Only when you know what is really happening in the market. There are lots of, you see, the big boy plays on the retail traders mentality. I want you to get that now. The big boy plays on the retail traders mentality. That's just what happens in the market. He plays on the retail traders mentality. So he knows that a normal retail trader would want to jump into, would get scared after a sudden move. He knows. Because yes, a normal retail trader would actually get scared. Maybe not scared now, but it's when you get scared that you want to get active. It's when you get scared, like, wow, this is already moving on. I think I'm missing out on this. I don't want to miss out on this. That's when you get active. That's when you take actions, eat the buys or eat the sales. And then that is when the big boy comes in. That is just when the big boy comes in. I hope you understand what I'm saying. So we need to get rid of lots of cultures that we, lots of cultures that we've, gotten accustomed to. The big boy cares less. He cares less about the lines you draw. He cares less about whatever it is you do. He cares less. Yes, those things work. Our Fibonacci retracement rule and everything, the Elliott waves and our support and resistance, our trend lines, they work. They work. But we should think like the big boy while we use those things. If you're a technical analyst and all you depend on is your technical analysis, trust me, and you are going to fail in forex. You will surely fail in forex. If you're a technical analyst and everything you depend on is your technical analysis, you don't check what is really happening. You don't check how the big boy is really moving in the market. Then trust me, you will fail in forex. You can mark my words. You don't trade forex only based on technical analysis. That's just how the retail trader thinks. When a retail trader thinks that they already know too much of their technical analysis, and they get confident. They get confident, but they get their confidence crumbled by their losses at the end of the day. Because at the end of the day, we tend to believe that when there is a trend, when there is a range, or what should I call it now? We call this sort of stuff flags. We call this sort of price action flags. When there are stuff like this, we know this is a bullish flag. So what we expect is that price should break down and sell. That is what we expect. That is the rule. That is the rule. But trust me, I can show you lots of charts where immediately after the so-called sell, which the big boy already knows that is what a normal retail trader would think. Immediately after the so-called sell, goes back up right into the trade and continues in new direction entirely. So people who got into the sell, because people would not, trust me, people will not get into the sell right inside the range. They would get into the sell outside the range. Let me get to the whiteboard. They will get into the sell outside the range. Let's say we have a bullish flag, what we call a bullish flag, which is just a channel, just another type of a range. So when they get into when they see a bullish flag, they expect that this price would eventually break this, retest the previous support and make it resistance, then go back down. That is what we retail traders think. That is the culture that we have. But there are lots of situations, lots of situations that even I, before I got to know about all of this, that even I got into, and I got stopped out. I got stopped out. I expected price to break some flags and everything, but it reversed at the end of the day. We call that manipulation. All right, so it seems as though I have just talked throughout this session, but there's one thing that I actually want you to get out of this session. We think like retail traders. We think like retail traders, but we have to stop thinking like retail traders. That's why I termed today's topic as the retail trader's mindset. That is what the big boy uses against us in the forex market. The big boy uses our mindset against us in the forex market. So if you can get that information for yourself, you can get that for yourself. You would take a cool, you would take a chill. In fact, you would want to stay off the market for a while and watch how things actually go in the market. You won't jump into things based on the culture that you've learned before. So get this today, get this and get it forever. The big boy plays on our mindset, it plays on our thoughts. That's what I want you to get today. I told you we are not going to rush anything in this series. It's going to be continuous. It's going to be continuous. I'm going to delve deeper into how we think as retail traders and how it can both destroy our account and help our account. All right, so we ran out of time already. We ran out of time already, so I like that we end the session here. So it was recorded. I would post it on Trek's YouTube channel, and I hope that you guys get something out of this series that is going on. I already posted my contact on the chat. Just chat me up if you have any question. I am ready to answer. I'm ready to answer your questions. So